Hello and good morning, everybody. You're with Martin Banev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlook. As usual, starting with a short coverage of the main markets we are to observe. North American markets comes first as usual. The Dow and the Nasdaq are up 5 points for the industrial average, 40 points for the Nasdaq. The Dixie index is up again almost 0.5%. Yesterday, the 10-year note auction came lower than previous, and the mortgage applications came 4.2% lower than previous. FOMC Minutes may be ready to raise rates as early as June. At the same time, others thought a rate hike wouldn't be warranted until later in this year, as low oil prices and the strong dollar would likely hold inflation down. Further improvements in the labor markets, stabilization of the energy prices, or a leveling out of the value of the dollar might be enough to move, the Fed officials said. Mr. Dudley, William Dudley, speech is also something which he said June rate hike remained a possibility, but said that the bar had been moved higher given that soft report along with others. Building permits month on month is what we are looking at for today. Also, initial and continuous jobless claims and the wholesale inventories, 30-year-old bond auction, and new housing price index month on month and year on year. This is in Canada. Moving along to the European markets, the German DAX 30 is down. It gained already about a few points. The CAC 40 is 20 points up yesterday. The retail sales came out a little bit negative, worse than anticipated yesterday, year on year and month on month. The euro is keeping the downtrend against its major rivals at about 100 pips pace per day. For Friday, tomorrow, we have the industrial production reports in Germany. Moving along to the UK markets, the FTSE opened again with a gap of almost 40 points yesterday, gained a total of 66 and closed at the level of 6,912 points. A £47 billion deal for the acquisition of UK's natural gas producer BG Group by Royal Dutch Shell has given a boost to the sterling, halting a two-day decline against the dollar. The cable moved up with almost 8%, 0.9% against the dollar, which was the biggest increase since March 20th. The sterling also rose against 12 out of 16 out of its 16 major rivals. On a different note, the country's GDP estimate is expected to come out with positive numbers. This, along with the positive services, construction and manufacturing data, should have given more fuel to the pound, but in the climate of political uncertainty, investors are much more cautious to buy the pound. Nevertheless, if the economic recovery remains robust, well after the election, we should expect the sterling to recover some of its losses, which was generated over the last 10 months. The biggest mover for the pound pairs yesterday was the Canadian dollar with 130 pips and 210 pips range. For today, we have the interest rate decision coming out from Bank of England, along with the more important asset purchase facility reports, the UK a quantitative easing program. There are also a few Tier 3 events showing numbers on the property market and trade balance outlooks, which are scheduled today. Tomorrow would be a little bit more important with regards to calendar and volatility events, as the manufacturing and industrial production report are due, as well as the well-expected GDP report. Moving along to the Asian markets, the Japanese Nikkei 225, 130 points raise for yesterday. A good point here to mention is that from Monday till today, the index gained about 600 points, which is quite a sufficient growth. We have the Bank of Japan monthly economic survey yesterday. The monetary base has increased significantly as asset purchases by the Bank of Japan have progressed, and the year-on-year rate of growth has been at around 35%. Business fixed investment has been on a moderate increase trend as corporate profits have improved as well. Public investment has more or less leveled off at a higher level. Basically, tomorrow, the 9th of April, the most important events in the agenda from the calendar will come from the inflation reports in China, CPI and PPI year on year. The Pacific markets, basically in Australia, the AIG group, the Australian Industry Group Performance of Construction Index for March, which measures the conditions on the short and medium term in the construction market. Companies basically answer questions related to production, employment, prices, supply deliveries, and inventories. Came out over the 50-point mark, 50.1 from 43.9, a significant growth there. Technical analysis, the Aussie dollar is at a very important psychological level of 0.77, which is a good time for trading, testing the level for 4 days already. The Kiwi dollar, again, we are at important zone of 0.76, close to 23% Fibonacci at last swing on a weekly chart. Moving along to commodities, the S&P 500 index had a range of 17 points, currently at 2,073. The oil prices rose yesterday in early trading, clawing back a part of 6% slump in the previous session after a shock jump in the U.S. Crude inventories at a record Saudi output. Although analysis said sentiment remained bearish. Overnight, gold futures dipped on Wednesday ahead of the release of the Fed's minutes from its March meeting later in U.S. afternoon trading. Gold prices fell in Asia on Thursday with investors awaiting the minutes of the Federal Reserve's latest policy meeting for further cues on the rate hikes, something that I spoke about in the beginning of the brief. The U.S. Energy Information Administration's next storage report, stated for release today, is expected to show a build of approximately 5 billion cubic feet for the week ending in April. This is all for the natural gas traders. For the U.S. shale drillers, the crash in oil prices came with 26 billion safety net. That's how much they stand to get paid on insurance they bought to protect themselves against the bear market, as long as prices stay low, of course. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.